Joining us right now is Titus Wealth Management President Eric Aanes is joining us right here in San Francisco. And Eric, it's great to see you this morning.
Hey, thank you, Maria.
Your reaction to all of this going on in markets right now. As an investor, you've got to make calls every day.
Yeah, we do every day. And essentially what you're seeing now is that people think it's a free fall. And we think it's an air pocket. We think it's really a short-term phenomenon that's going to happen, and technically we're looking at it from three different perspectives. We heard Jay Powell on Friday basically say we're going to be a little more accommodative. The 10-year has gone from 320 to 266, so maybe more of a risk-on trade because of the 320, 266. There's not a lot of yield there. Jobs numbers look great. Tariffs, China, government shutdown, those are really the three main things. Right now, if we can just get some sort of resolution on the tariffs, that's really going to give us some real lift.
Yeah, I mean, on the one hand, Dagan, you've got a great economy, those jobs numbers proving it. On the other hand, you do have valuations that have become more attractive after this last 2 months of a sell-off. So, you know, there is a reason to be bullish here.
Absolutely. Something I was talking about last week is that because the 10-year yield has fallen so much, that alone makes stocks look more attractive. With discounted cash flow analysis, you price those stocks based on what a risk-free asset will get you. And so the 2.66%, I think that really puts a floor in under the sell-off that we've seen. And you got a major rebound last week on Friday.
I mean, does it surprise you, Eric, that you've got the Federal Reserve raising interest rates and the 10-year is going lower?
Well, when I was on your show last time, we talked a little bit about rates, and I made the call. I said, hey, they're going to raise rates in December. Yes, that was baked into the cake. Moving forward, the scenario is quite different. We're really looking, as she said, dividend-paying stocks are starting to look very attractive to us. You had a little bit of a pullback on some of those big, larger names over the last 3 weeks or so. But by and large, dividend stocks look good. We feel like if we can get some resolution on the tariffs, that's going to be a good thing. And essentially, get the government back in business, folks. Yeah. Let's get this wall thing done.
But then there's the broader issue of a slowdown. I mean, you look at a company like Apple, obviously has been sort of the face of this slowdown so far. This morning, the Wall Street Journal is reporting that the technology giant's lowest priced iPhone, that's the XR, is falling short of expectations. One of the issues that Dan Niles from Alpha One Capital Partners brought up recently, this was about 2 months ago, he predicted problems for Apple, and he was on this program. The stock is down 30% since he predicted those problems. He was saying that the phones are frankly too expensive, but now they're having issues with the low end of the phone. Here's Dan Niles on October 24th. Are we looking at fundamentals deteriorating within technology?
I think you absolutely are. And this is exacerbated by the fact that you have a lot of inventory out there. So if you pick the biggest company in the world, Apple, for example, they have 89% inventory growth year over year in the June quarter that they reported. Their revenues were up 17%. Well, what if the iPhone doesn't sell well? They're going to have to burn that inventory off when we get into the March quarter. Look at last year, they had one phone priced above $1,000. This holiday season, they have 3 phones priced above that, and the average selling price, they're trying to boost it by another $100. The problem is, if you look at smartphone units overall, this will be the first year in history that smartphone units are down year over year.
He was so right on it. He nailed it. I'm happy to say Dan Niles is going to be joining us coming up in the program.
Great.
I want to get his take on it now. But 3 phones selling for more than $1,000, Eric, in places like emerging markets where the average GDP per capita in China is $16,000. How are they going to afford a $1,000 phone?
So when I talk to some of the top analysts for Apple, and I hear things like, it's got to be a consumer brand. And when we talk about that, we're talking about Apple Pay. We're talking about search engines, apps. The company's going to have to change and continue to morph into more of a consumer brand type of company. And don't forget, they've got a lot of cash, Maria. So they've got a lot of cash, so they could go out and one of the comments was made they buy Salesforce. Maybe something big like that would happen. Now, that may not happen, but valuations look pretty good on Apple, but we're not a big fan of Apple at the moment because just like what you said, I mean, how many folks can afford a $1,500 phone?
Yeah, I want to ask you about biotech in a second, but let me get Dagan's view on this because, Dagan, here you have a situation where Apple has come way down in terms of valuation, but they still have that issue of selling these expensive phones into the emerging markets while the emerging markets are slowing down.
Right. It's not just China, it's also India, to name one of the countries that's a problem. One thing about Apple, if you compare Apple to, say, a Microsoft, you've seen a resurgence in Microsoft. But that is because its original business is an installed base of upgrades with corporations. The bigger picture problem for Apple is as you try to extract more money from a consumer and the consumer business, guess who's going to bear down on you? The government. Whether it's regulators, it's antitrust inquisitions into any acquisition they try to make. That's a very different picture. Again, if you're squeezing more money out of businesses, regulators in Washington, they don't really care that much. But when it's consumers, that's when you get heat from Washington and around the world. And that's another problem for Apple I don't think enough people are talking about.
Yeah, you're right, and I push back on this notion that Apple's problems are as a result of the trade war that's going on with China. Apple's problems have much more to do with the fact that they're trying to sell expensive phones into the emerging markets like China, like India, all of these areas which are actually falling short of growth expectations.
And you can also see that. Oh, sorry.
Yeah, go ahead, Lee.
So you can also see Apple's taken a reputational hit, where it used to be the darling of consumers saying this is the brand that really thinks for me and is really ahead of the curve. People don't feel that way about the brand anymore, and that's a big problem. We're going to have to change that from a reputational issue as well.
That's a really good point, and I wonder if that reputational hit has to do with the expensive phones also, because after all, this is a commodity. All right, let's talk healthcare for a second, Eric. I know this is your bailiwick. Bristol-Myers Squibb acquiring Celgene for $74 billion. That was the headline last week. Big deal. What does that deal mean for the pharma industry, and where are you investing in terms of biotech right now?
Great question. When you look at that deal, I think it was $50 cash and a share of Bristol-Myers for Celgene shareholders. That's the deal goes through. I mean, these deals typically go through, but obviously they have to get some approvals and whatnot from shareholders and FDA. Also, there's a kicker in there of $9 a share if they can get 2 or 3. I think it's 3 drugs approved. Celgene's had a real tough time. I think the stock was 140, dropped down. It's priced at 102 right now. Company was buying back shares as they were dropping. Tough to predict these types of businesses, and what a great conference you're at this year, because frankly, healthcare is the future, and immunotherapy. Bristol-Myers has got Optivo, and Celgene's got a few drugs in the pipeline. If those do all come to fruition, the deal's going to really work out. If some of these things don't, well, maybe they overpaid for the company. Are you
buying any biotechs right now, or would you be a buyer in this?
So great question. So believe it or not, biotech is really bounces around quite a bit. I think the large cap index for biotechs, which is IBB, was, I think 2.5, 3 years ago, was at 120 something a share, and now it's 102. So really, we've seen a sector that hasn't gone anywhere, Maria. And every time we get around the same price, we always want to be buyers. And so we've been starting to dip our toe into that water, and we would expect to sell after we get maybe a 10 or 15% pop, because it's such a cyclical business that it's hard to predict, and the pipelines are so long.
Yeah. All right, we will leave it there.